This is one of the confusing chart patterns in the market for most of beginners. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to show you and explain how can you use a rising wedge in the trend continuation and as a reversal. If that sounds good, guys, subscribe on the channel, leave the comment below, like the video, and we see you in a minute on our today's video. What is a rising wedge? Okay, remember this is a reversal and continuation chart pattern. Okay, and this chart patterns is used in any financial market, cryptocurrencies, forex trading, futures, indices, on any financial market that you are trading, you can use this chart pattern. Okay, so as a signal of a reversal or a continuation chart pattern. So how is it formed? A rising wedge is formed when the price consolidates between a sloping support and resistance. So now this is two areas. Okay, this is a trend line which stands for resistance, and this downside is a sloping or a trend line of support. So as the market is consolidating from this area, as we are moving upside, we are internal of support and resistance trend lines. So on the other hand, we have this one which is from upside to the downside. Then we end up also consolidating between support and resistance trend lines. Okay, so how can we use this chart pattern to enter the market? Okay, we've been talking about a reversal and the continuation. Which reversal and continuation are we talking about? Okay, this is what you have to know. Most of the traders have the confusion about this formation of pattern. Okay, so now if a rising wedge forms after an uptrend, okay, when we are moving up, if the market is moving up and we get a formation of a rising wedge, we are expecting a bearish reversal. We are expecting the market to change the direction to the downside. Okay, that is a reversal from upside to the downside. Okay, now how do we enter from this chart pattern from the upside to the downside as a reversal? When we break below a support trend line, that's where we are going to be entering for sale. Okay, so we enter from this area, and then by expecting the market to reverse to the downside, so the stop loss will be above the formation of the pattern, and then the target will be equal to the formation of the pattern. That's why this is a target. On the reversal side, how can we target a big profit? Okay, we will take a look on that from the chart. So on the side of continuation, okay, so this is when it forms during the downtrend, it could signal a bearish continuation. Okay, so when you see a rising wedge formed in the downtrend, that we are expecting now the market to be continue in the downtrend. We are expecting also to be entering when the price breaking below the support trend line. This is a support trend line. That's where we are going to be entering for sale as an expectation of a bearish continuation. So now the stop loss will be above the formation of the pattern, and then the target will be equal to the formation of the pattern. So then we are going also to be talking about how can we target more than the distance of the formation of the pattern. Okay, so now we know how a rising wedge is formed, and we know what is a rising wedge signals, and we know how to enter from this pattern, where to set a stop loss and where to target. So now we are moving to the chart and see everything we've been talking about on a rising wedge. Here we have the chart which is in the uptrend. So now the market was moving up in the uptrend. we end up forming a rising wedge from this area. Remember, a rising wedge from the uptrend, we are expecting the market to be reversing to the downtrend. Okay, so what are we gonna be waiting for, or what are we gonna be focusing on? So this is how I enter from this pattern. Okay, so I was telling you that I'm going to be entering when the market breaks below this area, and also the target will be the formation of a rising wedge. So now another entry, the way I enter from this signal is that as long as we break below this area, we are going to be taking a sell, as I was talking about, and also we have more opportunities. Okay, so as long as we break below this area, I will be remained with an order block from this area. So if the market moves down and make a retracement from this high, I will be looking also for sell from that area. So now what I'm gonna be looking for is the market to break below this trend line. Okay, so stop loss will be from this area. My target now, the first target will be from the formation of a chart pattern. Okay, so now since I'm expecting a reversal, I'm gonna be targeting a big profit. Okay, so I'm gonna be looking for the areas from the zones which are stronger, where we reversed from for a bullish. Okay, so I'm gonna be looking from this area. Okay, this is going to be my target. Okay, this is my target. Remember, I will be also looking for an entry from this area if we make a high. This is what I'm looking for. If we break below this area, I'm also looking for a lower high to also be entering from this area to continue with the lower low. Okay, so where is my TPs? This is a TP1. Okay, so this is going to be a TP2. Okay, TP3 from this area, TP4, TP5, TP6, and then expect the market to be targeting my zone. Okay, so now let's see what the market is gonna give us from that area with the confirmation of a rising wedge. Okay, we are rejecting from that area. We broke below this area. Let's see what happened. Okay, let's see what happened. We are moving down. Continue moving down. Let's see what happened. Okay, now we are in our first target. Okay, we are now approaching our area to be selling from. Okay, I can also use a sell limit from this area, anticipating the market to continue moving down, and my target will be the same as the previous target. So now let's see if we can get to our target. Okay, now we go to our target. So that is your opportunity of using a rising wedge. Okay, from a rising wedge, you are going to be getting more and more confirmation from entering for bearish reversal. Okay, even inside the formation of a rising wedge, after that we formed a head and shoulders from this area, even the double tops. There are more chart patterns formed from this area which are reversals after formation of a rising wedge. That's how you have to master the price action, by entering with an opportunities from the formation of a rising wedge. Okay, so that's how a rising wedge will signal a reversal to the downside or a bearish reversal. So now on the other side, we are going to be looking on example from the bearish continuation. The market is moving down and then we end up forming a rising wedge in the bearish continuation. So how can we deal with this signal? By expecting the market to continue in the same direction, which is a downtrend. Okay, so now that's where you end up with this area where the market is gonna be touching by using a rising wedge. Okay, so when I see that, what am I going to be expecting is that the market is going to continue in the downside. This is an opportunity for a bearish continuation. So I'm gonna be looking on the break below of this area. That's where on the first option we have to be entering from by breaking below the support trend line. Okay, better entry will be when we make a low. This is a lower low from this trend line. Then when we make a high even from this area, I'm going to be looking for sell from those areas. I will be enter even when we break below the trend line. My stop loss will be above the formation of the chart pattern, the rising wedge, and then I'm going to be expecting the market to continue in the downside. Okay, let's take an example from the chart and see what do we have there. Okay, here we are in the downtrend. We formed a rising wedge in the trend continuation. So then what I was talking about, when a rising wedge in the trend continuation, we be rejecting from the areas of supply zones. Okay, this is another confidence that you are going to be getting from this area by expecting the market to continue in the bearish direction. So now you are waiting for a breakout from this area to enter for a trend continuation. We broke below this area. I'm gonna be entering for sell. My stop loss is above the formation of a rising wedge. Remember, this is my TP1. I have to check where I'm going to be targeting. This is an area I'm gonna be looking for. So now let's see if the market will continue in the same direction, which is a bearish direction. Moving down, okay, moving up. Let's see what happened. Okay, now we got another opportunity to be entering from the supply area. Okay, let's see now if the market is going to be taking us to our target. Okay, we are moving down, even more entries from those areas. So now we are approaching our target. So now we go to our target by using a signal from a bearish continuation from a rising wedge. So that's how you have to use a rising wedge on the side of reversal. Remember, on the side of bearish reversal and even a continuation of the downside. So guys, thank you so much for your time. Remember to subscribe on the channel, like the video, and I will see you next time. Be safe.